My brother stole my inheritance before probate ended. The judge ordered him to return every penny. The first time I heard the exact value of my father's death spoken aloud, it came from a judge who was telling my brother how much he had to give back. $842,619.17. The number landed in the courtroom with more weight than any accusation I had made during the previous 14 months. It included the money Owen had transferred from the estate account, the stocks he had sold, the rent he had collected, and the executor expenses he had invented while probate was still open. It did not yet include interest, my legal fees, or the penalties the judge was about to add. Owen sat across the aisle in the navy suit he had worn to our father's funeral. He kept smoothing one cuff as though the right gesture might return him to the day when everyone still believed he was the responsible son. Our mother's wedding ring was on his little finger. He had listed it as missing. When the judge asked him to remove it and hand it to the court clerk, the room became so quiet that I could hear the air conditioning switch on above us. Owen looked at me then, not with regret, but with the same offended disbelief he had shown when I first asked why our father's investment account had been emptied 3 weeks after the funeral. He had expected grief to make me passive. He had expected family loyalty to mean silence. Most of all, he had expected probate to be too slow and confusing for anyone to notice what he was doing until the money was gone. What he never understood was that our father had spent his entire life building systems designed to reveal missing pieces, and Owen had signed his name to every piece of evidence that brought him down. Our father, Richard Bell, owned a regional chain of hardware stores that never looked impressive enough to explain how much it was worth. Bell Supply had no glass headquarters, no celebrity endorsements, and no offices with inspirational slogans painted on the walls. It had 6 brick buildings, 42 employees, delivery trucks that always smelled faintly of lumber, and a customer base built over 38 years. Dad knew which contractors paid on Fridays, which schools would need salt before the first snow, and which old houses in our county had pipes that froze. He also owned the warehouse properties beneath 4 of the stores, a modest portfolio of index funds, and the lake house our mother had loved before she died. He was careful without being secretive. Once a year, usually in January, he sat Owen and me at the kitchen table and explained where the important documents were. The will divided everything equally. The company was to be held during probate, then either sold with the proceeds split or continued only if both of us agreed to a professionally managed arrangement. Neither child could force the other to work there. Neither could take company money as a personal advance. The lake house could be bought by one of us only after an independent appraisal and written consent from the other. Dad repeated those rules so often that they became background noise. I listened because I was the kind of daughter who kept warranty receipts. Owen listened as though the information were a preview of a prize already promised to him. Owen was 4 years older and had worked at Bell Supply since he left college after 2 semesters. In the story our family told, that made him loyal. I had gone away, earned an accounting degree, and built a career in compliance for a medical equipment manufacturer. In the story Owen preferred, that made me an outsider. He called my job paperwork and spoke about his own role at the company as if he had spent 20 years rescuing Dad from ruin. The truth was less flattering. Owen was charming with customers and excellent at making a busy day feel like a celebration. He was terrible with inventory, impatient with employees, and addicted to the appearance of success. Dad quietly moved him out of purchasing after discovering that Owen had ordered luxury display fixtures from a friend's company without comparing bids. He later removed Owen's authority to sign checks above $5,000. No one announced those changes. Dad disliked public humiliation, and Owen converted that mercy into a private myth that he was being prepared to inherit everything. At holidays, he referred to Bell Supply as my operation. Dad corrected him every time. Owen laughed every time, as if the correction were part of an old joke. I did not realize until later that he had begun arranging his finances around the assumption that the joke would end in his favor. Dad died on a Tuesday morning in early March after an aneurysm no one knew he had. He had opened the first store at 6, approved a delivery schedule at 7:20, and collapsed beside the paint counter before 8. There was no long illness, no final conversation, and no clean emotional transition from daughter to beneficiary. 1 hour I was answering emails about a product recall. The next I was driving through sleet while an emergency room doctor waited for me to arrive before saying the words that made every familiar object look temporary. Owen was already at the hospital. He hugged me so hard my face pressed into his coat. For 3 days we functioned as a team. We chose a casket, called employees, found Dad's military photograph, and stood beside each other while hundreds of people told us what Richard Bell had meant to them. Owen gave a beautiful eulogy about stewardship. He said, "Dad had taught us that you did not own a family business. You protected it for the people who came after you." I cried when he said it. Later, I would hear that sentence read back from the funeral recording in court. The will named Owen and me as equal beneficiaries, but it nominated Owen as personal representative because he lived nearby and knew the daily business. Dad had added safeguards. Owen's appointment was subject to court approval. Until then, he had limited authority to preserve property, pay ordinary operating expenses, and arrange the funeral. He could not distribute assets, sell investments, make loans, pay himself compensation, or transfer estate property without approval. A corporate fiduciary was named as successor if he failed to qualify or if a conflict arose. Dad's estate lawyer, Helen Park, explained every restriction at the first meeting. She did not bury it in legal language. She slid a one-page list across the conference table and asked both of us to initial each item. I still have my copy. Beside the sentence stating that no beneficiary owned any specific estate asset before distribution, Owen wrote his initials so heavily that the pen tore the paper. He asked how long probate would take. Helen estimated 9 to 12 months if taxes, valuations, and creditor notices proceeded normally. Owen leaned back and sighed. He had been expecting weeks. At first, nothing seemed wrong. Owen kept the stores open, met the payroll, and sent me photographs of Dad's house after he changed the locks. He said he was protecting it. I returned home after 10 days because my employer granted bereavement leave, not an indefinite suspension of reality. Every evening, Owen called with a new emergency. A delivery truck needed tires. The warehouse roof required a deposit. Dad had allegedly promised bonuses to 3 managers. Each request was plausible, and each amount remained below the threshold that would have forced immediate review. I told him to copy Helen and the estate accountant. Sometimes he did. Sometimes he said there was no time. I was grieving, working, and trying to believe that the brother who had stood beside me at our father's grave would not exploit the fact that I lived 2 states away. That belief lasted 19 days. The first alert came from Dad's bank because my telephone number was still attached to a dormant savings account he had opened for emergency property repairs. A transfer of $98,000 had moved from that account into the estate operating account, then out again less than an hour later. The alert showed only the last 4 digits of the destination. I called Owen from a conference room at work. He told me the money had gone to a supplier before a discount expired. When I asked which supplier, he said I would not recognize the name. When I asked for the invoice, he accused me of auditing him while our father was barely in the ground. It was an effective cruelty because it used my grief as proof that I was behaving badly. I apologized. He promised to send the invoice. 3 days passed, and what arrived was a 1-page estimate from Northline Strategic Services for operational continuity consulting. The address belonged to a mailbox store. The company had been formed 11 days after Dad died. Its registered agent was Owen's college roommate. I sent the document to Helen. She responded within 15 minutes, asking Owen to stop all non-routine payments until she reviewed the account. Owen copied me on a furious reply, saying that lawyers did not understand the speed of retail and that losing vendor confidence would destroy the company. Helen answered with the relevant paragraph from the temporary authority order. That night, Owen called me 6 times. On the 7th call, I answered. He shifted between tenderness and contempt so quickly that I could barely follow him. He said Dad had trusted him. He said I had abandoned the company. He said the payment was a short-term arrangement and would be documented later. Finally, he said something that clarified everything. Half the money would be mine eventually, so I had no right to object to how he used the other half. He believed the estate had already become 2 invisible piles, and that he could reach into his pile whenever he wanted. Probate, taxes, debts, and fiduciary duties were inconveniences imposed on wealth he considered delivered the moment Dad stopped breathing. Helen petitioned for a formal inventory and restricted account access. Before the court could hear the request, Owen moved faster. He liquidated Dad's brokerage portfolio, including shares Dad had held for decades, and transferred the proceeds through the estate account into 3 destinations. $275,000 went to Northline. $180,000 paid off a line of credit secured by Owen's house. $150,000 became a cashier's check used as a deposit on a 5-bedroom home in a gated development called Hawthorne Ridge. The remaining funds were divided into smaller payments labeled property maintenance, management reimbursement, and beneficiary advance. He also collected 2 months of rent from the warehouse tenants and deposited none of it into the estate. By the time the bank processed Helen's notice, Owen had removed more than $700,000. I learned about the house from social media. Owen's wife, Dana, posted a photograph of 2 champagne glasses on a granite island with the caption, "New beginnings after the hardest season." Through the windows behind the glasses, I could see a swimming pool and a row of young maple trees. The listing was easy to find. The closing date was 5 days after the brokerage sale. I sat at my desk after everyone left the office and compared the property record with the estate transactions. There are moments when betrayal feels hot and dramatic. This one felt cold. I understood that my brother had not panicked and borrowed money in a crisis. He had toured houses, negotiated an offer, arranged title insurance, and stood at a closing table while Dad's obituary was still clipped to the bulletin boards of all 6 stores. He had performed grief in public and spent it in private. When confronted, Owen did not deny buying the house. He said it was an investment for the family and claimed he intended to place it in the estate after renovations. No documents supported that intention. Title was in his and Dana's names. The mortgage application described the down payment as an inheritance already received. He had submitted an altered page from Dad's will that imported the probate restrictions and attached a letter on Bell Supply stationery certifying that Owen was the sole successor to the business. The signature beneath the certification looked like Dad's. The date was 2 weeks after Dad died. Owen said the lender must have assembled the paperwork incorrectly. He blamed a broker he had praised online the previous week. The emergency hearing took place in April. Probate court was nothing like television. There was no jury and no dramatic gallery. There were beige walls, fluorescent lights, and people waiting with folders that represented the most painful events of their lives. Owen's first lawyer portrayed the transfers as aggressive but well-intentioned estate management. He argued that the money remained traceable and that the house preserved value. Helen responded that a fiduciary could not secretly lend estate money to himself, much less use it to qualify for personal credit. The judge, Miriam Alvarez, asked Owen whether he understood the order he had initialed. He said he did. She asked whether he had obtained court approval for any distribution. He said circumstances had required immediate action. She asked what emergency required a swimming pool. That was the only moment anyone in the room almost laughed. Judge Alvarez froze the remaining estate assets, suspended Owen's authority, and appointed Meridian Trust as temporary administrator. She ordered a full accounting within 21 days and prohibited Owen from selling, refinancing, or encumbering the Hawthorne Ridge house. She also required him to surrender Dad's keys, business records, and valuables. Owen treated the order as a temporary obstacle. In the hallway, he told me I had humiliated the family over money. I remember looking at the courthouse floor and noticing salt marks left from winter boots. I had spent weeks wondering whether protecting the estate made me disloyal. Hearing him say it aloud finally broke the spell. He had taken our father's money, but he wanted the theft to become my shame. I told him the family had been humiliated when he forged a dead man's signature. Then I walked away before he could turn my answer into an argument. The accounting Owen filed was 83 pages long and almost useless by design. Payments were grouped into vague categories. Receipts lacked dates. Multiple versions of the same invoice appeared with different totals. He listed Northline's $98,000 charge as supplier retention and continuity planning, then attached a consulting agreement backdated to the week before Dad died. The agreement carried a digital image of Dad's signature. Owen listed the brokerage liquidation as a prudent response to market volatility, even though the portfolio had gained value during the weeks he held authority. He claimed the payoff of his home credit line reimbursed him for years of unpaid labor at Bell Supply. He valued Dad's watch collection at $1,200 and marked it distributed for safekeeping. He listed Mom's ring, a diamond surrounded by 6 small sapphires, as missing from the residence before he changed the locks. Most damaging of all, he declared under oath that every transaction had benefited the estate. Helen called me after reading that sentence. She said Owen had made our case easier. A poor accounting could sometimes be corrected. A sworn accounting that invented facts created a separate problem. Meridian hired a forensic accountant named Priya Shah, and I took unpaid leave to help gather records. Because I worked in compliance, I knew how to preserve files without altering metadata. Because I was Dad's daughter, I knew where he hid the ordinary records no outsider would recognize as important. Dad distrusted complicated software. He printed monthly statements, marked reconciled items with a green pencil, and stored each year in gray binders at the warehouse office. Owen had removed the current binders, but Dad kept duplicates of unusual transactions in a locked cabinet beneath his workbench at home. The key was taped inside an empty tin labeled finishing nails. Inside that cabinet, we found the architecture of Dad's caution. 2 years earlier, he had discovered that Owen used a company card to pay a personal tax bill. Owen repaid it after Dad confronted him, and Dad never told me. He did, however, begin keeping a related party ledger. Every payment involving a family member, employee-owned vendor, or unusual reimbursement was listed by date, purpose, approval, and supporting document. The ledger showed no unpaid compensation owed to Owen. It showed that Dad had paid him a salary above market rate, covered his health insurance, and forgiven a $32,000 loan after Owen completed a debt counseling program. At the bottom of the last page, Dad had written that no further family loans were authorized without 2 independent signatures. The note was dated 6 months before his death and countersigned by the company accountant. We also found a sealed envelope addressed to Helen. Dad had meant to deliver it during his annual estate review. Inside was a thumb drive containing scanned contracts, a video statement, and exports from the security system at the main office. In the video, recorded the previous December, Dad sat behind his desk and spoke without drama. He explained that Owen had recently asked for an ownership advance to solve what he called a temporary cash problem. Dad refused. He stated that neither child had received any business equity and that the will required equal treatment. He said Owen was capable of doing good work, but sometimes confused access with ownership. If any document appeared to grant Owen immediate control or retroactive compensation, Dad instructed Helen to compare it with the company's encrypted archive. His last sentence was not a prediction of theft. It was a father trying to leave room for his son to choose better. He hoped, he said, that the safeguards would never be needed. The digital archive revealed how Northline's agreement had been created. The source file was based on a legitimate snow removal contract Dad signed 18 months earlier. Someone replaced the vendor name, service description, amount, and date, while leaving the embedded signature image in place. The metadata identified Owen's laptop and showed the file had been created at 11:43 p.m. on the night after the funeral. A printer log showed 2 copies produced at the store office the next morning. Security footage showed Owen entering alone, carrying Dad's old document box, and leaving 40 minutes later. He later claimed the metadata resulted from restoring archived files. Priya tested that explanation and found it impossible. The file did not exist in any earlier backup. Its unique identifier began after Dad's death. The more we examined, the less Owen's conduct looked like one reckless decision. He had been preparing for months. His personal construction business had failed quietly, leaving guarantees and tax debt. He concealed the losses from Dana and borrowed against their first home until no equity remained. He promised a private lender that he would receive Bell Supply outright. After Dad refused in advance, Owen began copying signature files and downloading statements. He created Northline with his roommate so estate money could travel through a business that appeared independent. Northline retained a fee, then returned most of the funds to accounts Owen controlled. The roommate eventually cooperated in exchange for protection from civil claims. He gave Meridian emails in which Owen described probate as a waiting room and said the only challenge was moving enough money before accountants locked the doors. Those emails hurt more than the transfers. Money can be restored, at least sometimes. Language reveals what someone allowed himself to believe. Owen referred to me as the spreadsheet sister and predicted I would accept a few heirlooms if he convinced me the company was struggling. He planned to show low cash reserves, argue that Dad's taxes consumed the investments, and offer me the lake house at an inflated value in exchange for releasing my interest in Bell Supply. Then he intended to mortgage the stores, consolidate his personal debt, and sell the strongest locations to a national chain. Employees who had worked for Dad for decades appeared in his plan as payroll to be cut. The company he claimed to love was merely the largest object within reach. Meridian's administrator, Thomas Reed, changed the locks on the financial office and met every employee individually. That decision saved Bell Supply. Owen had told managers that probate restrictions were forcing layoffs and that I wanted the stores sold. Several employees were ready to resign. Thomas showed them the court order and explained that ordinary operations would continue. I joined by video for the first meeting, then drove home for the next. I did not promise that the business would remain in the family forever. I promised that no decision would be hidden behind Dad's name. That distinction mattered. Dad's longest-serving manager, Luis Ortega, opened a desk drawer and handed us a stack of photocopies. Owen had instructed him to destroy original delivery records associated with Northline. Luis copied them instead because Dad had once told him that honest paperwork protects honest people. The records exposed another theft. Owen billed the estate for roof repairs at 2 warehouses, but the contractor named on the invoices had not performed the work. The supposed contractor was a dissolved company whose tax number belonged to Dana's uncle. Owen transferred $64,000 against those invoices. Photographs submitted as proof had been taken from an online commercial roofing gallery in another state. The actual warehouse roof still leaked. During a storm in May, water damaged inventory and nearly injured an employee when ceiling material fell. Meridian paid for emergency repairs, and Owen later argued that the expense proved his earlier payment had been necessary. Priya placed his fake invoice beside the new contractor's photographs. Even the roof vents were different shapes. At family gatherings, Owen had always been the person who controlled the emotional temperature. If he wanted forgiveness, he became funny. If someone resisted, he became wounded. When the evidence grew too specific for denial, he recruited relatives to pressure me. An aunt called to say court battles would destroy Dad's legacy. A cousin warned me that Dana and the children could lose their home. No one called Owen to ask why he had put his children's home at risk. He circulated a version of events in which I was using technical mistakes to seize the company. He said the judge had frozen assets because Helen was overly cautious, not because he had taken them. I stopped defending myself one conversation at a time. Helen advised me to assume every message could become evidence, so I answered relatives with one sentence. The court had appointed an independent administrator, and the accounting would determine the facts. Silence felt unnatural at first. Then it felt like refusing to enter a room built to confuse me. Dana contacted me privately in June. She sounded exhausted. Owen had told her the Hawthorne Ridge down payment came from a life insurance policy naming him alone. She discovered the truth when the title company received the court's notice. She wanted me to persuade Helen to release the house because their children had already chosen bedrooms. I told her I could not remove estate funds from a court order. She asked whether I wanted them homeless. It was the same transformation Owen always attempted. His choice became my cruelty. I asked if she had known about Northline. She ended the call. 2 weeks later, her attorney produced text messages showing that she had questioned the source of the money before closing. Owen replied that the estate was basically ours and that Mara would be handled. Dana had not designed the scheme, but she had signed the mortgage application and accepted the explanation because the new life suited her. The judge later treated her interest in the house differently from Owen's, but innocence was no longer available to her as a complete story. Owen changed lawyers twice. The first withdrew after the false roof invoices emerged. The second attempted mediation. We met in a conference suite overlooking the river. Owen offered to return $200,000 over 5 years if I agreed to support his reinstatement as personal representative and waive claims related to the business. He also wanted the estate to recognize a management fee equal to 5% of its total value. In his proposal, stealing money had created leverage to demand more money. The mediator carried offers between rooms, but I could hear Owen's voice through the wall whenever he became angry. I thought about accepting only once, not because the offer was fair, but because exhaustion makes an ending look valuable at any price. Then Priya reminded us that the money did not belong to me alone. Creditors, taxes, employees, and every valid estate expense had priority. I had no moral or legal right to bargain away assets simply to stop feeling tired. We rejected the offer. The next morning, Owen tried to refinance Hawthorne Ridge, despite the court's prohibition. He submitted an application through an online lender and failed to disclose the pending litigation. The lender discovered the recorded restriction before funding and notified Meridian. That attempt changed the case. Judge Alvarez held Owen in contempt, ordered him to surrender his passport, and required a bond to prevent further loss. She also expanded the tracing order to accounts held by Northline, Dana, and Owen's construction company. Owen called the measures persecution. To me, they were the first sign that the system understood he would not stop merely because stopping had been ordered. Tracing the money took months because Owen had divided transfers into dozens of smaller movements. Some paid ordinary expenses, which made the theft harder to describe but not less real. Estate money covered his mortgage, private school tuition, a boat loan, credit cards, landscaping at Hawthorne Ridge, and the retainer for his first probate lawyer. He bought Dad's watch collection from the estate for $1,200 without notice, then pledged 2 watches to a dealer for $38,000. He removed tools, antique signs, and Mom's jewelry from Dad's house before the inventory. Several items appeared in photographs Dana posted from the new house. One image showed Mom's sapphire ring beside a glass of wine. Another showed Dad's brass store sign mounted over Owen's bar. People imagine stolen inheritance as a single suitcase of cash. In reality, ours leaked into groceries, interest payments, patio furniture, and objects displayed by people who believed possession would become legitimacy if enough time passed. Priya built a schedule that followed every dollar from its estate source to its final use. Her spreadsheet had hundreds of rows, but the logic was simple. Money entered the estate from a known asset. Owen moved it without authority. The recipient either retained it, spent it, or transferred it again. Where funds mixed with personal money, Priya applied standard tracing rules and gave Owen credit for legitimate estate expenses supported by evidence. She was more conservative than I felt he deserved. That discipline made her findings hard to attack. She excluded payments that merely looked suspicious. She corrected duplicates. She reduced the claimed loss whenever a vendor confirmed real work. After all adjustments, the unauthorized principal totaled $842,619.17. Owen's expert offered a different number, $76,000. He reached it by treating the house deposit as an estate investment, the personal debt payoff as deferred compensation, Northline's transfers as consulting, the jewelry as abandoned property, and the brokerage loss as an unavoidable market event. His report assumed every explanation Owen gave was true, even when documents contradicted it. During deposition, Helen asked whether the expert had seen Dad's related party ledger. He had not. She asked whether he had verified Northline services. He had spoken only with Owen. She asked whether a residence titled to Owen and Dana generated income for the estate. It did not. The expert admitted his figure depended on the court accepting that Owen had authority to make distributions before probate ended. The temporary order explicitly said he did not. The deposition was also where Owen's own accounting trapped him. To justify the management fee, he testified that he understood he was acting as a fiduciary from the moment he took control. To excuse the house purchase, he testified that he believed he was acting as a beneficiary entitled to his share. Those positions could not coexist. A fiduciary could preserve assets but not take an early inheritance. A beneficiary could not distribute estate property to himself. Helen asked which role authorized the transfer. Owen answered that he had been doing what Dad would have wanted. She played the video of Dad refusing in advance. Owen watched his father state that no child owned company equity and that equal treatment was mandatory. For the first time, his confidence seemed to detach from him. He asked to pause the deposition. My own deposition lasted 7 hours. Owen's lawyer questioned why I had not worked at Bell Supply, how often I visited Dad, and whether I resented that Owen had been closer to him. The questions were meant to turn accounting into a competition for affection. I answered because the truth did not require decoration. I had lived away for 16 years. Owen saw Dad more often. I called every Sunday, came home for holidays, and helped with taxes when asked. Dad could love one child's daily presence without giving that child permission to steal from the other. Inheritance was not a prize for accumulating hours beside a parent. More importantly, the estate rules did not change according to which sibling could perform the more convincing grief. The hardest discovery had nothing to do with money. Among Dad's archived emails was a draft he never sent me. He wrote it after refusing Owen's advance. He said he worried that naming Owen as personal representative placed temptation too close to desperation. He considered changing the nomination to Meridian, but feared Owen would see it as rejection and spiral further. Dad hoped the limited authority language and professional oversight would be enough. He apologized in advance if his desire to preserve peace created work for me later. Reading that draft made me angry with him in a way death had not allowed. He had seen the risk. He had protected Owen from the emotional consequence of being removed, and the practical consequence fell on me. For several days, I could not enter the warehouse office without hearing the unfairness in his apology. Loving Dad did not require pretending he had made every choice correctly. That realization changed what I wanted from the case. At first, I wanted the money restored and Owen exposed. Later, I wanted the pattern named. Our family had spent years translating Owen's emergencies into other people's responsibilities. Dad paid the tax bill. Dana accepted explanations. Employees corrected inventory problems quietly. I softened questions to avoid provoking him. Each act seemed compassionate in isolation. Together, they taught Owen that consequences were obstacles someone else would remove. Probate did not create his entitlement. It provided the first pool of money large enough for the entitlement to become undeniable. The evidentiary hearing began almost a year after Dad's death. By then, Bell Supply had survived 2 holiday seasons under independent management. Meridian stabilized inventory, renegotiated insurance, and discovered that 4 stores were profitable enough to support the 2 weaker locations, while a sale or long-term plan was evaluated. I attended every day of the hearing. Owen sat with 3 lawyers and boxes of exhibits. Dana sat behind him only on the first morning. the courtroom filled with employees, relatives, and 2 reporters who had found the case through the contempt order. I wished they were not there, until I remembered how carefully Owen had used secrecy. Public facts were uncomfortable, but private distortion had been worse. Helen began with the authority order, the page Owen initialed, and the first transfer. She did not call him a thief. She let chronology do the work. Bank records showed that the $98,000 reached Northline. Northline's records showed it returning $85,000 to Owen's construction company. That company's records showed the money paying his overdue lender. The roommate authenticated the emails. The document examiner explained the copied signature. Priya traced the brokerage proceeds. Luis testified about the fake roof invoices and the instruction to destroy records. The title officer testified that Owen described the house deposit as an inheritance distributed under the will. Each witness supplied one piece. Owen's explanations required all of them to be mistaken at once. When Owen testified, he spoke for nearly 6 hours. He described years of sacrifice at Bell Supply and said Dad had made oral promises no one else heard. He said he intended to repay the estate after selling his construction business. He said the house was necessary because his old home carried dangerous debt. He said Northline provided strategy through informal conversations. He said the forged certification had been drafted by the mortgage broker. He said Mom's ring slipped onto his finger during the funeral and remained there because removing it felt unbearable. That last claim might have inspired sympathy if he had not listed the ring as missing and valued it at 0. Judge Alvarez asked most of her questions at the end. She wanted dates, not feelings. When did Dad promise retroactive compensation? Owen could not say. Why was there no entry in the related party ledger? Dad did not document family understandings. Why then had Owen created a backdated written agreement? His lawyer advised him not to speculate. What estate benefit came from paying his home credit line? It freed him to focus on the stores. Why was Focus worth $180,000 when his salary continued? He had no calculation. Why did he attempt to refinance property under a freeze? He misunderstood the order. She handed him the order and asked him to read the sentence prohibiting refinancing. His voice became quieter with every word. Then she asked about the sworn accounting. Owen had grouped the transfers and signed a declaration that they were complete, accurate, and made for the estate's benefit. If his current position was that some were early beneficiary distributions, why had he labeled them expenses? He said the accountant chose the categories. The accountant testified that Owen supplied them. If the house was an estate investment, why was it omitted from the inventory? He said he expected to add it after improvements. If Northline's contract existed before Dad died, why did its file metadata begin after the funeral? He blamed software. Every answer created another contradiction. By late afternoon, the story he had built no longer had a surface strong enough to stand on. The judge issued her ruling from the bench the following week. She found that Owen had breached his fiduciary duties, converted estate property, submitted a false accounting, violated multiple court orders, and acted in bad faith. She permanently removed him as personal representative and denied all executor compensation. She disallowed the invented management fee, the Northline contract, the alleged deferred wages, and every unsupported reimbursement. She ordered him to return the traced principal of $842,619.17. She imposed prejudgment interest from the date of each transfer, surcharged him for losses caused by the brokerage liquidation and warehouse damage, and made him responsible for the estate's forensic and legal costs attributable to his misconduct. The final judgment would exceed $1 million. The order did not assume Owen had $1 million waiting. It created methods of recovery. Hawthorne Ridge would be sold under a court-appointed receiver. Net equity would return to the estate. Dad's watches, Mom's jewelry, the brass sign, and other identified property had to be surrendered within 10 days. Northline's remaining account was seized. Owen's eventual beneficial interest in the estate was subject to offset, meaning he could not receive a distribution while owing money back. His construction equipment and non-exempt assets became available for judgment enforcement. If the recoveries exceeded what he owed, he would keep the lawful remainder. If they fell short, the judgment would follow him. The judge also referred the forged documents and sworn accounting to prosecutors without predicting what they would do. Owen reacted only when she ordered Mom's ring handed to the clerk. Until then, he seemed to believe the ruling remained negotiable. He twisted the ring once and looked toward his lawyer. The judge waited. He removed it, placed it in an evidence envelope, and signed the receipt. I did not feel triumphant. I remembered Mom wearing that ring while kneading bread, pulling weeds, and waving from the passenger seat of Dad's truck. Owen had reduced it to a line item and then worn it as a shield of sentiment. Seeing it leave his hand felt less like victory than the correction of an insult. Outside the courtroom, reporters asked whether I was pleased that my brother had been ordered to return every penny. I said the money belonged to the estate and that the court had enforced Dad's written plan. I did not discuss the criminal referral or call Owen names. The most important truth was already in the order. My restraint frustrated relatives who expected either reconciliation or revenge. They wanted a dramatic ending because dramatic endings allow observers to stop paying attention. Recovery was slower. Hawthorne Ridge sold for less than Owen had paid. Fees and the mortgage consumed part of the price. The watches came back, though one was damaged. Northline had spent most of its fee. The estate recovered money from Dana's settlement, the roommate's repayment, insurance claims, account levies, and the offset against Owen's share. It took another 11 months to collect the full principal and approved costs. Owen filed an appeal, arguing that the judge had treated ordinary administration errors as fraud. The appellate court affirmed the ruling. Its opinion was dry and devastating. It noted that a personal representative's authority to preserve property is not authority to appropriate it, and that later promises to repay do not erase self-dealing. Owen abandoned further appeal after his lawyers withdrew over unpaid bills. Prosecutors eventually charged him with forgery, theft from an estate, and perjury-related offenses. He entered a plea that avoided prison but required probation, community service, financial disclosure, and restitution compliance. Some relatives called that too harsh. Others called it too lenient. I stopped measuring justice by whether Owen suffered enough. The useful measure was whether he could continue shifting his losses onto everyone else. For the first time, the answer was no. Probate finally ended 2 years and 3 months after Dad died. Taxes and valid debts were paid. Bell Supply was valued by 2 independent firms. I did not want to run it, and I refused to recreate Dad's mistake of assigning family identity to business authority. The managers proposed an employee-led purchase backed by a regional investment cooperative. Meridian negotiated terms that preserved all 6 stores, protected jobs for at least 5 years, and paid fair market value to the estate. I supported it. Owen objected from probation, insisting the company was being stolen from the family. His objection carried no controlling authority. The court approved the sale. After deductions and the offset against Owen's distribution, the estate divided what remained according to the will. The mechanics confused people who read only the headlines. Owen was still a beneficiary. Removal as representative did not automatically disinherit him, but the money he owed was charged against his share first. Because recoveries had restored the estate, I received the amount Dad intended, not a bonus taken from Owen. Owen received a far smaller cash distribution because much of his share had already been consumed by what he took, the damage he caused, and costs imposed specifically against him. Equal inheritance did not mean equal consequences. I bought the lake house at its appraised value with a combination of my distribution and a mortgage. Every step went through Meridian and the court. An independent broker confirmed the price. Owen received formal notice and the same opportunity to bid. I insisted on the procedure even when no one else thought it necessary. The house was not the grandest estate asset, but it held the only rooms where our family had once been uncomplicated. During the first summer after probate, I repaired the dock with Luis and invited Bell Supply employees for a picnic. We hung Dad's recovered brass sign inside the boathouse, not above a bar. Mom's ring remained in a safe until I had it cleaned and appraised. I later gave it to my daughter with the documents showing its history, including the inventory that once called it missing. Objects do not carry morality, but records can protect their stories. Owen and I did not reconcile in the way relatives kept predicting. We exchanged necessary messages through an approved family communication service while he completed probation. He sent apologies that began with grief, pressure, Dad's favoritism, my suspicion, Dana's expectations, or his fear of failure. For a long time, every apology positioned his actions as weather that had happened around him. I answered only once. I told him I could accept that desperation influenced him without accepting that it controlled his hands. He had opened accounts, altered files, signed declarations, and ignored orders. Responsibility lived in those choices. Whether he eventually understood that was his work, not mine. 3 years after the ruling, he wrote again. The message was shorter. He said he had spent his life treating rescue as proof that he had done nothing wrong. He did not ask me to forgive him or to speak to Dana, who had divorced him after the house sale. He said the courtroom number followed him because it measured more than money. It measured how many times he chose concealment after he still had the chance to stop. I did not know whether the insight would last. I replied that I hoped he continued doing the work. Then I returned to my own life. People sometimes ask how I knew to challenge him so early, as if I possessed a special instinct. I did not. I received a bank alert. I asked for an invoice. The invoice did not make sense. The difference was that after one apology, I kept asking. Fraud often survives because each individual irregularity can be explained away. A strange transfer is an emergency. A missing receipt is grief. A forged letter is a broker's mistake. A new house is an investment. A false accounting is bad advice. Taken separately, the explanations invite patience. Placed in order, they reveal intention. Dad's safeguards mattered, but they were not magical. His ledger did not freeze an account. His video did not stop Owen from signing. His will could not enforce itself. People did that. Helen reading the order carefully, Priya tracing funds without exaggeration, Luis preserving records, Thomas protecting employees, the bank responding to notice, and a judge insisting that family status did not reduce fiduciary duty. Even my anger became useful only when it moved me toward evidence instead of spectacle. For years I believed the courtroom ruling was the end of the story because it contained the sentence everyone remembered, return every penny. Now I think the real ending came later, on an ordinary January afternoon, when I received the estate's final closing statement. Every account balanced, every approved creditor had been paid, every recovered object was listed. The page left no blank category where a family excuse could hide. I signed beneath the line confirming that administration was complete and mailed it back to Meridian. That evening I drove to the lake house. Snow covered the dock, and the windows reflected a sky already turning dark. I made coffee in Mom's old pot and opened Dad's last gray binder at the kitchen table. On the inside cover, in his familiar green pencil, he had written a rule he used at the stores. Count what comes in, count what goes out, and never be ashamed to ask why the numbers changed. It was simple enough to sound impersonal, yet it held everything he had failed to say directly and everything I had needed to learn. Owen thought inheritance began when Dad died. He thought possession could outrun procedure, that money moved quickly enough would become history before anyone assembled the truth. He was wrong. Inheritance began with responsibility, and probate existed precisely because grief makes families vulnerable to people who mistake access for permission. The judge did more than order my brother to repay a debt. She returned meaning to the boundary he had tried to erase. The estate was not his emergency fund. My silence was not his consent. Our father's death was not a transfer of power to whoever reached the bank first. Every penny came back, though not always from the place Owen had sent it. Some returned through the house sale, some through surrendered property, seized accounts, insurance, settlements, and the share he would otherwise have received. Interest arrived later. Legal costs followed. The accounting took years, and the emotional cost belonged to no spreadsheet. But the final balance mattered because it proved that delay was not defeat. Probate had not ended when Owen declared himself owner. The law had not become irrelevant because he spent faster than the court could schedule a hearing. And family love had never required me to finance my brother's belief that consequences were for other people. When I think of him now, I do not picture the cuff he kept smoothing or the ring leaving his hand. I picture the moment after the judge read the number, when Owen finally looked at the exhibit stacked beside him. Each binder contained documents he had created, altered, signed, or tried to bury. He had built the record himself. I had only refused to look away.